Hi, it's Michael Farr at Farr Miller and Washington. A lot's happened since I've had the chance to chat with you. We've seen the bond market give up a lot of ground. Last time we talked, the 10-year Treasury note was somewhere around 1.8% in yield. Yesterday, we went up higher and above 2.3%. This morning's news and overnight trading has the yield on that 10-year note at around 2.22%. Those yields have moved a lot higher, which means the price of that Treasury has fallen. We're seeing some weakness in the bond market, not only here, but also around the world, particularly in Europe and in Germany. I mentioned to you in earlier chats that the 10-year Bund at one point was yielding 7 basis points. Give them $1 million for 10 years and they pay you $700 a year in interest. That's now up to almost 60 basis points. So about a half a point full increase in those rates actually correlates pretty closely to the increases we've been watching in the U.S. Stock market can't seem to decide what to do, though we've seen a good deal more volatility with several hundred-point moves one way or the other. And the stock market seems unsettled. Earnings are coming in probably a little bit better than the lowered expectations a lot of analysts had set. Stock prices really haven't had any real reason to go crazy, but there seems to be a lot of worry and doubt out there. One hedge fund manager said to be too negative is to fight 4 central banks at the same time, meaning the U.S. has been very accommodative and remains so. They're talking about tightening, but they haven't done it yet. The European Central Bank, the Japanese Central Bank, and the Central Bank of China are all being accommodating right now. So we're in that situation where the central banks continue to support markets. Retail sales data came out, and it was a little bit weaker than expected. The consumer is not out there spending money wildly. The U.S. economy is not producing the data that suggests that the Fed should do something really immediately. The Fed keeps saying that they need to do something immediately. I'm not sure they have the data to support it. They may do it anyway. As I continue to look at the market seems to be acting the way markets act at a top. More volatility, a big down day yesterday. We crept back up. We didn't quite capture the ground that we'd lost. And I think there are ample reasons to be cautious. So, and we are, and we have been, but this feels a little funny. It's a nervous time. May is one of the toughest months for stocks. It's the second toughest month for stock performance over time, next to September. So this is a tough time for stocks, tough month. Keep your powder dry. Make sure you know why you own what you own. Make sure that your portfolio, in our opinion, should be a bit defensive. And if the music stops, make sure you have a chair nearby. If you need some help, give us a call at Farr, Miller, and Washington. We are being careful and think you should too. In Washington, D.C., on my way to Charleston, South Carolina for my son's college graduation, right after I watch the Caps win tonight, I'm Michael Farr.